Okay, so what is the attempt here? That's what we understand. The attempt here is to look at global countries, and that's what the finance secretary also referred to, that look at all the global countries. None of the big global countries have very high note in circulation, whether it is the US dollar or whether it is the Great British pound. So in India, the high denomination note had to go out. The number of notes, the number of 2000 rupee notes in the system are about 11%. This is not demonetization. There is a window in which the note would be accepted. B, if 50% of the total note, they go back into the system, it actually in the near term could have impact on the bank deposits. Banks in the short term are struggling because they are not getting a lot of deposits. So this could be a band-aid approach, but this could be a quick fix, but not a permanent fix. But yes, this is going to be an incremental uptick for banks where the notes would be deposited. See, the impact of the 2000 rupee note under circulation, they've come down dramatically. This 2000 rupee note was created post demonetization, but after that UPI has happened. After that, the economy has become significant, has moved to significantly on the digital platform. The unorganized sector is also started using the digital platform. You had demonetization, you had COVID, you had UPI. So the nature of the economy per se is changed. And this is certainly not demonetization that the value of your currency or the value of your 2000 rupee note will go away. So it's not disruptive. It is something which definitely startled everybody and surprised everybody that why the government is moving. But I guess the finance secretary clearly said that the economy right now can absorb it. There is going to be no disruptive impact of this. And globally, everything in the, I mean, locally the economy is moving from unorganized to organized and from currency to digital. And this is something where the time window, I think, is a very niche time window of more than 3 months.
Yeah, September 30th is the timeline that you have to withdraw the 2000 notes from circulation, exchange them or deposit them with bank accounts up until that date. Okay, that was clearly the big headline, but let's move away from that and focus in on the markets and how we wrapped up the trade on Friday's trading session. Yes, the print of 18,200 was intact as we held on to that, though we snapped that 3-day losing streak, which was fairly encouraging. In fact, the weekly decline has been the most since the 19th of March. And the disappointing factor is that FIIs, after 16 straight sessions of buying, have turned net sellers. IT as a sector gained for 4 straight weeks on the trot, and the debt limit concerns, that is a big headline when it comes to Wall Street, a muted start on the SGX Nifty. So we snapped that 3-day losing streak, but you did have FIIs, Nikunj, which turned net sellers.
So, Avan, you could look at the market from the prism of, okay, last week was not a positive week for the Nifty. Okay, last week FIs were net sellers on Friday. But for me, that's meaningless. And the reason why for me that is meaningless is because you cannot just look at 1 week's price action and assume something. B, the stocks from the mid and the small cap space, the stocks which are making a new high, I think that list is a very impressive one. The activity in the F&O market, if I look at stocks which are trading within the F&O market, it's an impressive list. So I will not read too much into last week's price action. I think Nifty is still above 18,000. Globally, you're not going to see market move in a straight line. I think we've consolidated enough. This week is the F&O expiry. If globally nothing goes wrong, and if markets get convinced that there is sincere progress on the debt ceiling front, that's going to be that will give a spring in the stride for the bulls. So if globally things move, if there is nothing wrong, looking at the local momentum, the fact that Nifty is consolidated, I guess this week in a sense could be an important week, and there is a serious case for Nifty to actually break out because of that expiry fillip. So for me, last week's price action, frankly, in the overall scheme of things is not that important, excepting that it just points out that right now markets perhaps are focusing on more mid and small cap stocks, and that really could be the trend for next 2-3 days as well.
Okay, this morning the SGX Nifty, much like all the global handover from Friday night, is indicating a very, very muted start. The SGX Nifty is lying absolutely flat with just a marginal negative downtake. There you go, around those 18,200 levels. But a lot of earnings as well to number crunch, and of course key segment would be a Zomato and a delivery. We're going to be chatting with the management of delivery as well shortly on the show and get you an analysis on Zomato as well. But just looking at the scorecard for Zomato, it's largely, I would say, above estimates. Yes, the revenues have been amiss and haven't quite matched up with the market expectations, but both on the PAT as well as the EBITDA front, it is definitely a beat. in the conference call, Nikunj, them highlighting that growth, revenue, lower costs, all of it aided the profitability, and they continue to be bullish on the long-term outlook amid under-penetration. And they are saying that they will continue to make progress in the dining out business as well.
So Aisha, whatever they've committed or whatever they've committed in terms of reaching that profitability mark, I think they've managed to achieve in the core business, which is the food delivery business, a good 1 quarter ahead of what they actually had guided for. B, there is a decline in the GOP, but is that seasonal or that is something which is going to be a feature for this quarter as well? I think is the fly in the ointment. Now 2024, the way I look at things moving for Zomato is that will the Blinkit acquisition move in the right direction? Food delivery business already has consolidated. What could be the impact of ONDC, at least in the near term, for a food delivery company, and the dine out business where it moves? So you would say that 2024 for Zomato would be significantly different than 2022 and 23. The reason being that last year they had to digest the Blinkit acquisition. There was serious selling which came by anchor investors, and then the company in a sense had to change their internal strategy in terms of defining or redefining the path to profitability. So I think one thing is very clear, that Zomato is now committed to walk on the path of profitability. But in this entire journey where they are going to be walking towards the path of profitability, how will they ensure that the growth is not compromised? And the other two platforms which they've created, which is the Blinkit and the entire dine out experience and the Zomato Gold membership, what happens there? The differentiating factor for me between Swiggy and Zomato is that Zomato is going through a earnings upgrade cycle. Swiggy has just gone through a cycle of markdown. 3 markdowns have come for Swiggy. Largely, it's not a listed stock. So Zomato and Swiggy, they may be in the same business, but in terms of the market perception, one is going through markdown, other one is going through earnings upgrade. I think that's a very big difference.